Hey everyone, it's Jen Catalanato
And Jason Catalanato.
with the Lifestyle Home Team, and today we have our lender partner Todd here with Interlinc Mortgage. And we asked him to come today because he has some different loan programs, and we just thought it'd be easier to have him explain it over video versus boring you with our long, lengthy emails. But we're really excited about some of the products he has to offer. And so today, what are you going to talk to us about today?
I'd like to talk about some first-time homebuyer options that are available that everybody always continuously goes to FHA. There are some new options that will help you guys sell more homes through conventional financing that allows people to go a little bit higher debt-to-income ratio, a little bit lower down payment, and still get the house that they want.
Awesome.
That's awesome. And so what is the program what is the one I think you're telling me about?
The two are Home Possible and Home Ready. So what they are is they're 3% down. In a traditional conventional loan, you can do 3% financing, but your debt-to-income ratio is generally stuck between 43 to 45 for total debt-to-income. This we can go all the way up to 50. And the nice part about it is you're in the Home Possible, Home Ready program is you're going to get a little bit better interest rate on it because it is designed for generally first-time home buyers.
Great.
And secondly, on top of it, we can give you an MCC tax credit, which allows to add $167 a month into your income. And at the end of the year, when you go to file your taxes next year, you're going to get $2,000 additionally back in your
That's
tax
incredible.
Wow.
So wait, I just want to clarify that one, because we said that these are like generally for first-time home buyers. Do you have to be a first-time home buyer?
One of you has to be a first-time home
Okay.
buyer, but there are some different options, and that's kind of a gray area and depends on how long you've been out of the previous home. So first-time home buyer is kind of it's a gray area, and it's
Okay.
dependent on every situation is different.
Okay.
So for example, we've ran into situations in the past where maybe they bought a house 10 years ago and they've been renting for the past 10 years, but they actually qualify as a first-time home buyer, even though they are the period of time.
Correct, that would
Okay.
still make them a first-time home buyer.
Okay, cool. Okay, so I guess I just want to kind of clarify this, because first-time home buyers, one of the scariest parts of this whole process is you, which I can understand.
Yes.
He looks like a really, really scary guy. I wouldn't want to call him either. Okay. But I can't stress enough that the first step in this process is talking to somebody like you,
Right.
because there are so many different programs out there. Everybody thinks that they have to have 20% down, or they only fit into this mold,
Right.
and that's not the case at all. And so the main thing I would like to just really emphasize is that when they call you, it's not like they're committing to you, or that you have to run their credit right away or whatever. You can just have a conversation with, this is my situation, this is what I hope to achieve, and you can put them, send them in the right direction. Like this program, it was awesome. You came in, we had lunch a little over a week ago, and we had a client who was she's a first-time home buyer struggling to get into that home and the price point, and then he told us about this program. I'm like, oh my gosh, how did I not hear about this before? Called her up, she got on the phone with him, and done. Like it helped everything, and it got her into the home that she really wants. And
And she gets a $2,000 bonus when
Yeah,
she gets her taxes.
exactly.
Tuesday,
So
so-
to file the taxes next year.
yeah, so I guess okay. So walk me through the process. So how much do you need down on this one?
3%.
3%, not 3.5, just 3.
3% down. And here's the better part about this versus the FHA that I like, is that you're not stuck with that mortgage insurance forever.
As I was just
So
going to ask.
it's great. You get a little bit discount on the mortgage insurance through this program, so you're not paying quite as high in the mortgage insurance. Two, once you get to 80% loan to value, that mortgage insurance you can have come out. So that's even going to lower your point payment even more. It's a great program. It allows sellers love it because they're coming in with conventional financing, which, as you guys
Yep.
know, when you sell a
It's more
house,
advantageous.
Yeah.
it's more
Yeah.
advantageous that they're coming in with conventional financing versus FHA, because sometimes you get some challenges with some values and things like that with FHA.
Yep.
I get it. And so, okay, so we need 3% down, and now, like you said something about a tax credit. So
Yes.
explain the tax credit.
So it is income based, and it's based on the number of people in your home. So when you look at it, we're going to pull up the income for your home, for the county that you're in, and the number of people in your home. So if you have a family of 4, well, that income is going to be different based on the county. We're going to go ahead and do that, and what's nice is we're going to add $167 a month to your income, which might allow you to qualify for a little bit more house.
Yeah.
Because some new families starting out, you maybe have a little extra student loan debt that just is hanging out there. You're just trying to get going. You want to buy a home, and those things are kind of holding you back. We can add that into your income, and as part of to increase a little bit more buying power.
Awesome. And so, to that point, it kind of goes into that rent versus buy. So I'm going to go back to this client that we were, she was struggling to find a home in our price range that she was really happy with. So then she came to us and she said, I don't know if it's my time. Maybe I should just continue renting. And, we hear that a lot with first-time home buyers because it feels overwhelming. And, but I guess I just kind of want to stress that, now is, renting is costing you money. I know it, you don't think it right up front, but it really is costing you money in the long run.
It is, and as you guys know, we're in a very limited inventory market right now.
For sure.
Values are starting to increase, so are the rents. So at some point, I know there's that fear of, and I went through it, and I'm sure you guys did when you bought your first home, and as you buy another home, we all still have that anxiety we go through in the process. But you just have to look at the whole process as a whole and what you're gaining through the value when you go to sell your home. And it's just kind of like starting a savings account or investment account. At some point, you put a little bit of money in there going, gosh, am I ever going to get those returns? And you just have to watch it grow. And you just at some point have to, it's kind of like jumping in a cold pool. At some point, you just got to jump in and go for it.
Right.
That's like buying a house. You just, at some point, you can only wait so long. And sometimes you might have waited too long and now you
And price yourself out of the
And
market.
we've seen that.
And we've
Yeah.
seen that happen, and that's why I was trying, to talk to her, and I'm so glad it worked out, and, because she really was in love with the house. She was just, I get it, it's a scary process, especially, when when else do you go spend hundreds of thousands of dollars? We
Right,
don't,
right,
it's not an
right.
everyday thing,
Right.
so, and that's one of the things that I really appreciate about you, is that, we get that this, we know we do this every day.
Right.
But we appreciate the fact that we know that this is not an everyday purchase for our clients. And we really want to take that time to help educate you and get you into the right program and, and just help guide you. I always tell everybody, people are like, you sell houses. We don't sell houses. You're either going to like a house or you don't like a house.
Right.
Our job is to help put you in touch with the right people to get you what you really want and help you make that really smart financial decision.
Correct.
Yes.
That's the most important thing to us. So, so that was the Home Ready program.
Home Ready and Home Possible. They're the one's just through Freddie Mac, one's through Fannie Mae. They're basically
Okay.
the same
Same
program.
thing. Okay.
Yeah. 620 credit score is your minimum credit score to qualify. So
Not bad.
Not
That's
bad
easy.
at all.
it's
yeah.
very, very liberal guidelines that can help you guys qualify for a home.
That's
Awesome.
awesome.
Good to
So,
know.
a couple different things. Obviously, if you would like to just get in touch with Todd, we'll have his information attached to this video. But, it's a simple process, even as easy as going online onto his website and applying if you want to. Now I kind of want to talk to you a little bit more about this renting versus
Okay.
buying thing, because he just showed us a super cool tool here, and so it really, for me, I'm a visual person, and it just really put it in perspective
Okay.
for me. So, so let's go ahead and get logged in, and you can kind of show us what we're doing.
Let's
Absolutely.
go over the numbers.
So in this situation, in buying versus renting, this really helps out a lot of new buyers, really getting started, not really sure, what is it going to look like? So we'll just kind of use $200,000 as our purchase price as we go through this.
Okay.
And we're just going to use Pasco County, kind of the new area that we're in here in Wesley Chapel, New Tampa.
Yeah.
We'll use Pasco County, very popular area in the Tampa Bay area right now. That everybody's. So the average rents are about $1,500, especially for a young family. You're going to spend that in rent. Renter's insurance, about $20 a month. You're going to have that 4% increase in rent every year if you continue to renew that lease. Your rents are going to go up whether you want them to or not. If you choose not to, you're going to be stuck moving over and over and over again, and that's not really that fun. So,
Or cost effective.
Yeah, exactly.
So in this situation, I put it in as an FHA loan in this one. So it's going to be a purchase price of $200,000. The mortgage amount is going to be $193,000 with your closing costs.
So just to clarify, so that mortgage amount is, what you said, FHA,
Yep.
which is typically 3.5% down.
3.5% down.
Okay, so that's where we came up with that.
Yep. Closing costs right around $7,000. Property taxes, it's always depending on the neighborhood. It's
Yeah, for
Can't
sure.
never
If
predict it,
CBD or
so-
not, yeah, exactly.
So we put it in at $2,500 for the year. Homeowners insurance, $1,200 is probably a little high for this area.
Yeah.
We can edit this down a little bit, maybe put it to around $700. And your maintenance and repairs for the year are gonna be about $2,000. Just general upkeep you always are doing to your house as you go. And then when you go to sell your home, it's gonna be 6% that the
You're
realtor.
paying the
Yep.
cost, okay. I just want to chime in here real quick because this is the number one thing that I get from new home buyers.
Yes.
And then mortgage insurance.
Yes.
They're like, I have insurance on my house. That is not the same
Right.
thing.
So what the mortgage insurance is for is because you're allowed to put down a little bit less money than 20%, which makes it great. I mean, not everybody has 20% to put down anymore.
Right.
I very rarely see it anymore. Maybe, 1 out of every 10 or 20 buyers actually has that full 20% in this day and age. And so what that is it's guaranteeing to the people backing the loan. It's just an insurance that kind of goes into the pool in case, you do come across some challenges and you can't make your home payment. It does happen, unfortunately. It's not common, but it does happen. So, and then you guys got your 6% here. So let's take a look as we go through this. So this is based on appreciation rates through time. So we're going to include in here what's happened, all the way through the 90s, early 2000s, in the mid 2000s, what we went through, and where we're back to today. So it's not just a pie in the sky. This is real appreciation throughout time.
So I'm looking at the appreciation here, and you guys have the appreciation rate of 2.4%.
Which is very low.
I was gonna say, that is very conservative, so we're not throwing you some
No.
fantasy numbers here. We've seen
Right.
numbers, honestly, 4 times that in the last
Yeah.
several years. So I think that that's a very conservative figure, which I like, so.
Very
I'm
good.
gonna put that.
So what we're going to put up here too as well is when you're buying versus renting, okay? So if you look, we're paying about $100 more total out of pocket. And that includes, if you look up there, that includes about $167 for maintenance and repairs. Now, are you going to have that every single month in your home? No, you're not. So if we actually take that off there, your actual mortgage payment's going to be less than what you're paying in rent. Now, if you look at this, in 9 years, we're gonna do a whole 9-year summary. That same property you're renting, 9 years from now is gonna go for over $2,000 a month in rent, okay? So your cash flow difference in this situation is $17,837 more you'd put in your pocket.
By
Now,
By owning. And
that's just cash flow.
Yeah.
Now, here's where this gets really fun and why it's important to buy your first home. It might not be your forever home. We all kind of outgrow it as we grow our families. And so here's what's going to happen with that appreciation, the 2.44%, which is extremely low over 9 years. You're going to have $48,409 that you're going to gain in appreciation. Also, as you're making your payments, the balance of your loan comes down, so you're also building equity that way through your amortization of another $32,643. Here's what homeowners, especially new buyers, need to understand at the end of the day. This, for me, is what really set this apart and is really helping people understand, is that when you buy a home, and I'm talking about the $14,000 in total commissions, and as a buyer, please understand, you're not paying a realtor. This is just when you are selling your home. The seller's going to pay for the cost of the agents. So think about this for a second. After we take all of that out, you're coming out $76,985 ahead. In another investment, please tell me where you can put 3% down or 3.5% down, and in 9 years return $76,985. That's the power of real estate. That's the power of owning a home. And these are as conservative numbers that I can provide to you at 2.44%.
Yeah, that's
I
very
agree.
conservative.
I loved this. This really, I think, put it in perspective. We can talk about it, but to see it like this and to really break it down step by step,
Yes.
right here it is.
Yep.
Well, and every buyer's different, so in every situation's different. I can have your clients give me a call and we can run this in their exact situation they're in the house they're looking at, the rents they're paying, and give them a realistic number today of what
Awesome.
they're wanting to do.
Yeah, that's great.
Yeah, I really love this. So I'm super excited to share this with our clients because, like you said, our biggest goal, and I know it's yours as well, is let's figure out what is the right move for you. We want you to do what's the best for your
Best for the
family,
client, yep.
and to help you achieve those dreams. Everybody has that dream of homeownership, and I think it's so doable. It's just people get very, very afraid to make that first step.
Yep.
And I can't stress enough to you that who you choose to work with is key to everything. This is a huge financial decision, and I know you've been in the industry for a long time. We've had a long working relationship, so this isn't like a fly-by-night thing for
Right.
us. This is, we trust him because he's done a lot of great things for our
Good, yes,
clients.
he's helped out a lot.
And, so yeah, that's where we're at.
Wonderful.
Yeah, I appreciate it, and here's what I tell everybody, you're always gonna remember three things. You're gonna remember the day you got married, the day you had kids, and the day you bought your first house.
Yeah.
And to be a small part of it, for us, it's a really neat experience to know you were a part of that one
It
piece there.
is, yeah, it is fun.
It is, it's really amazing. So we really would like to thank you for coming today.
Yes,
We really
thank you.
appreciate it. And,
Great information.
great information, and if you want to, get in touch with Todd and to go over all of these programs that he has, like we said, this is just one of the products that he offers. His information will be attached, or you can give us a call, and we'll get you in touch with Todd Anderson with Interlinc Mortgage.
Thanks,
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 guys.
have a good
Appreciate
one.
it.
We'll see you around.
Bye.
Bye.